to rebuild your credit and increase your credit score. Let's face it, most of us have faced a financial hardship at some point in time in our lives, and we've needed to find different ways that we could rebuild our credit. Rebuilding your credit takes time, and there are no easy ways to do it or secrets to get it done. Let's discuss some ways that you can start rebuilding your credit and increasing your credit score. Pay your bill on time every time. That means paying your bill by the day that it's due. You can even pay it ahead of time. If you're mailing in your payment, mail your payment in before the bill is due. The postmark date on the bill does not matter. They want that bill by the date that it's due. If it's due on the 15th, pay your bill by the 15th and get it in the mail before that date. Don't get too close to your credit limit. If you have been authorized a $3,000 credit limit, don't get too close to using all of that credit. Most experts want you to use less than 30% of your available credit, and some of them even say 10%. If you don't need to use $3,000, stay under that limit. Credit scores consider how far you are to being maxed out on your limit. So if you're using too much of your credit score could go down. Don't apply for too much credit in a short period of time. If you're applying for credit, have it span over an extended period of time. If you have too many inquiries on your credit report, it could decrease your credit score and it could scare off lenders into offering you credit. Now, take into account that this also includes balance transfers. If you're applying for a balance transfer, this could affect your credit score. And also applying for store cards when they're offering you a discount when you're in the store and making those purchases. Try to limit those store credit card accounts. If you don't qualify for a regular credit card, try a secured credit card. Most financial institutions offer this. Whatever your credit limit is, that's how much you have to put as a deposit for a secured credit card. When you start to make purchases, you pay back your credit card and it starts to establish your credit. Eventually, as you show that you can pay on time and that you're responsible with your credit, they may be able to refund you your deposit, and then the secured card can turn into an unsecured credit card. Be wary of the secured credit cards because the interest rates for these are a little bit higher than an unsecured credit card, but it's a very efficient way for you to start building and rebuilding your credit. Now, if you pay with a credit card, it's important to pay your balance in full every month. Don't carry a balance from month to month and pay those exorbitant interest rates. If you carry a balance, you're actually paying more than what you purchased the item for. If you purchased a $20 dress, you'll end up paying $25 if you carry that balance from month to month or even for a couple of years. So just consider paying it off every single month in full. Next, you want to keep it up. Your credit score builds over a period of time, and the longer you pay on time, use your credit, and use it responsibly, it will start increasing your credit score, and you may start receiving additional offers that better fit your needs and lower interest rates as well. So the longer you have your credit and pay your bills on time, it allows lenders to see that you have a good credit risk. Next, you want to check your credit report for errors and fix those errors right away. You can go to annualcreditreport.com every single year and pull your credit report. If you see something that looks a little off, call the lenders, call the company, and let them know that it's an error on your credit report. If it's not an error, take care of it, handle it, and get everything fixed. This is your financial health checkup to ensure that your credit is on the right track. How long does it stay on your credit report? So, late payments, Chapter 13 bankruptcies, and foreclosures stay on your credit report for 7 years. A Chapter 7 bankruptcy will stay on your credit report for 10 years. Now, if you have any lawsuits or judgments that you've gone through, those can stay on your credit report for 7 years or even longer, depending on what they are. So just be aware of that when you're looking at your credit report and counting down the days when you can start rebuilding your credit report and eliminating some of the things that were in your past. Finally, let's discuss 4 things that don't build your credit. Using a debit card or paying cash. These things aren't helping you repay debt, but they are helping to keep you out of debt. Using a prepaid card. So a prepaid card is a card that you've loaded your own money onto, or that someone's loaded money onto for you. It's your own money. Taking out a payday loan. So taking out a payday loan, even if you make one payment on it, does not help you rebuild your credit. A lot of times they don't report these to the credit agencies, so it's not going to rebuild your credit or your score, and the interest rates are insurmountable. You pay a ton more than what you actually borrowed from the agency. So try to stay away from these and find another source if you are in need of additional funds. Getting an auto loan from a buy here, pay here car lot. A lot of times they house these loans internally and they don't report your payments to a credit reporting agency. So that's it. We discussed 7 ways that you can start rebuilding your credit and increasing your credit score. We also discussed how long negative information stays on your credit report and 4 things that don't help you to rebuild your credit or increase your credit score. If you found value in this video, like, subscribe, share it with your friends. My links are below if you want additional information on how I can provide assistance with you on rebuilding your credit, increasing your credit score, and establishing goals for your financial future. Thanks for joining me.